All right, today we're going to dive into a massive story that's unfolding right now. It's all about debt, control, and a digital revolution that is fundamentally changing the money in your pocket. And this whole thing, it doesn't start with some big bang. It starts with a number. $38 trillion. Just take a second to let that number sink in. This isn't some made-up figure from a movie. It's very real, and it's kicking off some huge changes. But what exactly is it? You guessed it, it's the U.S. national debt. And according to the analysis we're looking at today, this one single, absolutely mind-boggling number is the real catalyst for a huge, seismic shift in the entire global financial system. That's the billion-dollar, or I guess the $38 trillion question, isn't it? How on earth does a government's debt problem end up changing the actual cash in your wallet? Well, that's exactly the story we're here to unpack today. So here's the plan. We'll start with the debt problem itself. Then we'll follow the money to see where it's going. After that, we'll look at the government's high-tech solution, check out the alternative path that Bitcoin offers, and wrap things up with a wild mystery at the heart of it all. Let's get right into it. Okay, so first things first, we have to start at the beginning. A world that is, frankly, drowning in debt. This is the one problem that really sets all the other dominoes in motion. So here's the deal. When the debt gets this big, just paying the interest on it becomes one of the government's biggest bells. It's like your credit card interest payment being bigger than your rent. To handle this, central banks are kind of forced into a corner where they have to make money cheaper, which means lowering interest rates. This pretty much signals the end of what's called quantitative tightening. That's the fancy term for shrinking the money supply. And it means a new wave of money printing is probably just around the corner. And, when all this cheap money gets printed, it's got to go somewhere, right? This shift in policy is about to unleash a massive tidal wave of cash, and it's all looking for a new place to call home. So, let's follow the money. Now, this number is really important, $7 trillion. That's about how much cash is just sitting in super safe, low-yield money market accounts. But as interest rates start to fall, that mountain of cash is going to start searching for better returns, moving into things like stocks, real estate, and other scarce assets. And two of the biggest contenders for all that cash are gold, the classic hedge against inflation, and its new digital challenger, Bitcoin. What we're seeing right now is this fascinating push and pull between the two. It's like a tug of war with capital flowing back and forth as investors try to decide between the old guard and the new kid on the block. And listen, this isn't just some theory from the internet. We're talking about huge financial players like Standard Chartered now openly telling their clients they should think about rotating out of gold and into Bitcoin. That's a huge deal. And this chart just brilliantly shows you what that could mean. The gold market is so enormous that even a tiny little bit of that money moving over could have an absolutely explosive effect on Bitcoin's price. The sources we're looking at suggest that if just 1% of the gold market rotated over, you'd see a $30,000 price jump. If 5% moved, we could be talking about over $240,000 per coin. Okay, so while investors are out there looking for a hedge, governments, well, they've got their own solution cooking, and it's a very, very different vision for the future of your money. And that solution is called a central bank digital currency, or CBDC. Now, we have to be super clear on this. This is not a cryptocurrency. It's just a digital version of the US dollar or the British pound, issued and completely 100% controlled by the central bank. So this direct control opens up a whole new toolbox for them. First, the money can be programmable. That means they can literally code rules and restrictions right into your cash. This can be used to enforce certain behaviors. For example, your spending could be blocked if you attend a protest they don't like. And of course, this creates a system of total surveillance, where every single transaction you make is tracked and tied directly to your mandatory digital ID. If that sounds a bit abstract, listen to how a former deputy at the Bank of England, John Cunliffe, explained it. He used this incredible analogy. Imagine giving your kids pocket money, but programming it so they literally couldn't use it to buy sweets. Now just scale that idea up to an entire country's economy. And please, don't think this is some far-off sci-fi concept. The material we're drawing from points out that the basic plumbing for this is already being built. In the UK, for example, a new digital ID is about to become mandatory just to have the right to get a job. So, if that's one possible future on the table, what's the alternative? Well, this brings us right back to Bitcoin, which offers a completely different road forward. You see, Bitcoin's core DNA is basically the exact opposite of a CBDC. Where a CBDC can be printed forever, Bitcoin has a fixed supply, only 21 million, ever. Whereas CBDC is totally centralized, Bitcoin is decentralized. And where CBDC requires permission and is constantly watched, Bitcoin is permissionless and resistant to censorship. But here's the great irony. For a system that's all about transparency and not needing to trust anyone, there's a huge mystery right at its center. Its creator, who went by the name Satoshi Nakamoto, completely vanished. And that disappearance has sparked a really fierce debate. This is the big, lingering question. Who was this anonymous genius, or maybe it was a group of people, who built Bitcoin, gave it to the world, and then just disappeared into thin air? So, two major theories have really taken hold. On one hand, some argue that Bitcoin might have been a CIA project. They point to the incredibly advanced cryptography, the perfect timing right after the 2008 crash, and the idea that it could be a trackable, controlled opposition to the dollar. But on the other hand, you have the theory that it's a true cypherpunk invention, designed specifically to undermine state control. They'll point out that its open source code is the opposite of how secret agencies work, and that its organic growth proves no one's pulling the strings. But then there's a really strong counterargument, which is that ultimately who created it just doesn't matter. The source material uses this great analogy. If a car suddenly appeared in the 1700s, would you care who the inventor was once you could pop the hood, take the engine apart, and see exactly how it works for yourself? Because Bitcoin's code is totally open. Anyone can look at it and verify there are no secret backdoors. At the end of the day, this whole debate really forces us to ask a much bigger, more fundamental question about how we think about trust and the technology we use every day. And that's really the question we'll leave you with. Does the origin story of a new tool matter more than what that tool actually does and how we as a society decide to use it? Because the answer to that question might just define the future of money for all of us.